What's going on, guys? So I want to do something real quick for you guys. Um as bad as the selling has seemed like it's been, I want to take a look at something real quick. Okay, so talking to my buddy, ex Wall Street trader, prop firm trader, traded on Wall Street directly. He uses a ton of moving averages. That's kind of the way he learned. It's what works best for him. He taught me. And then, kind of just looking at the overall market the last few years that I've been trading, it's what works best for me as well. I like to kind of see exactly, where these stocks are going to stop and where they could possibly find support. So that's why so many lines are on my screen. Now, like obviously when I'm scalping, I don't have all these lines on my screen. I kind of just use these specific levels. The most important ones for the daily time frame is going to be the 5-day moving average, the 10-day moving average, the 20-day moving average, and then obviously the significant one is the big boy, the 50-day moving average. But that's not what this video is about. What this video is about is a lot of institutions, they also, run a lot of their trading, a lot of this stuff, like, especially on tech, especially on, your Amazons, your Netflixes, your SPYs, your triple Qs, those type of big indices, those type of big boy movers. They're also set up on, to be traded around the Fibonacci retracements. So I just want to kind of quickly bring it up. If you don't know what the Fib is, you don't know what a Fibonacci retracement is, go to Google, type in what is a Fibonacci retracement. I'm not going to get into details on explaining it, but it kind of gives us specific levels. So one thing that I really want to look for here on the Qs, and if this is going to pan out the way I think it's going to pan out, okay? So my original hypothesis is that we were going to pull back into the 50-day moving average, kind of test that level, consolidate, and then get ready to ramp higher. But if you pull up the Fibonacci retracement, okay, generally the sweet spot on any sort of significant pullback, on any pullback, and you can use a fib level on the 5-minute chart, you can, for scalping, you can use it on the hourly chart, you can use it on a weekly chart, depending on the time frame that you're trading. I just threw it up on the daily time frame, right? Just let's get a macro picture here. Let's get a big idea look. Okay, so the sweet spot for a prime level, for any sort of significant pullback. So I know a lot of scalpers that use the 5-minute chart or the hourly chart. They like pullbacks into the GP. The GP is the golden pocket, that 0.618 area, and that's going to be this level here. Okay, this level, this 61.8 level here is what's referred to as the golden pocket, the GP. So I'm just going to say the GP, and then you have the 50% retracement here, which is going to be the green line, and then you have the 78.6 retracement, which is all the way down here. But normally that sweet spot is anywhere in between the 50 and the golden pocket. Okay, so the golden pocket would be pretty much the sweetest level that you can get into. But if this pullback is completely algorithm driven, you can see we came down. This red line is a 50-day moving average. Okay, that's significant. That's the level that I was watching. But if we look at just the 50% retracement from the recent lows to the recent highs, and these lows I'm taking going back to October before we broke out here, all the way to the highs that we put in here on the 22nd of November. The 50% retracement on the Fibonacci, on the Fib is 379.48. Okay. And we came down here and we tested 379, 378.87, and then bounced. So if we're not even looking at the Fibonacci retracements, we came down to the 50-day moving average. We came down to the linear regression supply and bounced perfectly. So the point I'm trying to make, if this pullback is completely pre-planned, is completely, so traders can get in at hedge funds can get in at a lower price before we start this next leg higher, and they bounced this off the 50% retracement. This was a complete planned pullback, and I don't mean like, in a negative way that, oh, it's planned and it's so people can lose money. I'm not talking about that. What I'm talking about is that this pullback was set up on an algorithm, and this immediate pullback, this is what we need to watch for here. This immediate pullback, I'm going to put another setting on here. I'm going to put the next retracements higher. Okay, I'm going to put some levels there. If this pullback is going to go, like meaning that we're going to pull back and now we're just going to go now, that was it, that was the last of it, then guys, we're going to pull back to the 50, reclaim that. We pulled back to 50%. The 50% retracement is nothing. Like that's like bare bones where you would want to see something pull back significantly. Ideally, we want to get it down here into the GP. The GP is 372. The GP is also going to correlate with the 100-day moving average on the triple Qs. So one thing that we can look forward to or look for going forward is the Dow Jones pulled into the 100. The SPY pulled into the 100. If the triple Qs are going to follow, let's see where this bounce takes us. Then on the Fibonacci retracement, the 386 is the next level of resistance. And if we kind of look here, that 385 level is the 50 EMA as well as the Bollinger Band here. Okay. Next level up is 394, which also is going to correlate perfectly with the 50-day moving average. Do you see what I'm saying, guys? The point I'm trying to make here is that we know that as retail traders, we're not driving the market. I don't care what you think, and I don't care how much money you think you're trading with. You are not driving the market. You holding shares is not going to prevent the stock from going higher or lower. You selling shares is not going to make the stock go lower, and you buying shares is not going to make the stock going higher. I don't give a shit what you think. It's not the way that it works. I'm sorry to break your heart. It's not. So all of you guys who got into some of these meme plays and you guys are diamond handsing things and saying that, if we don't sell, the stock's not going lower, it's fucking bullshit. If they want it to go down, they're going to make it go down. I don't care what you say. So what I'm looking at here is this pullback here into this 50% retracement. If the Santa Claus rally is going to happen into the late December into January, it's going to happen now. Okay. It's going to happen now. If it's not, the bounce that we're going to see is going to be into that 385, 386 area. And we might touch 394 and then we will pull back to 372. If we pull back to 372, if we do come up, I'm just giving you guys different levels to kind of toss around. If we come up to 386, okay, let's say we get this bounce, we do have a little bit of a relief bounce, a little bit of a dead cat bounce, and we pull up into this 386, 387 level, and then we lose it, and then we do lose the 50% retracement around 379, which is also going to correlate with the lows here, losing this linear regression channel. Then we're coming to the GP. So if we get rejected here and we start coming back down to the 50% retracement, you're going to want to see, does it consolidate here? So let me just draw something up for you. Do we get this? Okay. Do we get this? Okay. Or if we get this, okay, come back down, back test the 50% fib, try to spike and then lose this level here. We're coming down to 372. Buy your puts below 379, 378. Get your puts ready for 372, maybe go a week or two out. And then then we will come into the GP. And as soon as we come into the GP, we'll kind of do something like this. And this is the way that it will look, guys. This is the way that it's going to look going into January and February. So the most ideal thing that we want to see, I don't really want to see a bounce and then a breakdown of the 50% fib. I don't want to see a loss of the 50-day moving average. I don't want to really see that be lost because that just means more time and more waiting. What I would like to see is a bounce off of the 50-day moving average, a bounce off of the 50% fib. And like, as much as I keep looking at this, just seems like the market is ready to go now, just how strong that it closed. Okay. If we were going to have any sort of dead cat bounce, there was no need to really, ramp it up off of these levels. But my personal opinion, I think that we're going to get ready to go. And this is what I think it's going to look like. I think we're going to come up into the zone 386. I think we will come back down here and back test 380 one more time. And then I think that's it. I think we start to go. Okay. I think we come back up at 394, come down maybe somewhere between 390, 386 in this level. And then we start to go something like that. That's the most ideal situation. But guys, I mean, you got to learn technical analysis. You can't possibly trade if you don't know, how these big boys are trading. It's a gem. Just leave the fib up on your chart and just kind of play the ranges. So going into Monday, let's just play the range. Let's play the dead cat bounce into 386. It's as simple as that, guys. We're not shooting for 400. We're not shooting for 395. We're shooting for 386 on the dead cat. Okay, if we do get rejection, and then you see towards the end of the day in the futures we're trading like this, and we can't break through, okay, or we do peekaboo through, and then we lose it in, let's say, after hours or pre-market, and we come back down, we can play right back down to the downside here at 380, because that'll be the second test. And on this second test, I expect to consolidate here and hold this time. And when we do hold, maybe Wednesday, Thursday, I expect the bounce back up through 386 to go ahead and take it out that time. Yeah, so we're looking for the bounce into 386 come Monday, Tuesday. And then let's look to consolidate. If the market really wants to get going, you know, we clear out the 386, come back down, back test 386, put in that lower high, and then we start to go from there. That's all depending on how fast that they want to ramp this market up, guys. Because I mean, the snapback, even though it's been 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days, 2 weeks since we came off of all-time highs, guys, they can snap us back within a matter of a week. Right back up here to all-time highs. All systems go once we pass 408.71. As soon as we pass 408.71, that's it, guys. We'll probably come back in that zone and back test it one more time, and then we will be sitting at all-time highs. I'm almost positive by February, March. I don't think we really calm down until February or March. By that time, I think the Dow Jones and the IWM will also start to kick forward. I'm going to go ahead and do another video. I'm going to pull up the IWM and kind of see what we're looking at, because I know the IWM has been pretty beat up. But if we do get rejected here at the 386, guys, and we lose the 50% retracement, which is at 379 and today's lows, this is the sweet spot to start loading up calls and or putting on some swings for the ride up. And that's going to be once the NASDAQ hits the GP at around 372, 373, somewhere in that range. I would feel extremely confident loading up, you know, a month, 2 month out options and letting this thing just do its thing. But when you look at it from the grand scheme of things, guys, a 50% retracement is nothing. Like, this is no hedge fund, no long-term investor is even batting an eye at this. This is nothing. Now, if we were to do something like this, okay, and lose this, now we're talking bear. Now we're talking bear territory here. This is a correction. This will be a correction going down. If we were to lose those levels, a complete change in momentum. There would have to be some serious catalyst to have that happen. Just keep an eye on it, guys. Put this on your chart and just let it sit there. Let this sit on the cues and kind of know where you're at. Are we above the 50% retracement? We're golden. Are we down here in the GP? This is time to load up. If we're holding and trading above the GP, any pullback into the GP needs to be bought. Okay, it needs to be bought. I hope that kind of helps, guys, and I will see you guys all in the next video.